Interest rates are rising, there's uncertainty in the world. So what do good investment properties look like right now in November, December 2022? In this video, I'll go through 8 recent deals that we've done so you can see what makes a good investment property, the key characteristics, and how you can go off and get these types of properties yourself. If you're interested, carry on watching. My name's PK and I help people build passive income through property using data, using the Property Investment Accelerator without needing to put down $15,000 on a buyer's agent every single time. In this channel, we talk about property, the economy, and financial happiness. Give it a like, turn the notification bell on. Let's go. And I want to start off by saying these aren't like specially vetted properties or made up deals. They're posted here in my Facebook group with almost 30,000 people now. You can see right here. So they're verified. The people who I've tagged other clients themselves who have bought their properties. You can join the group, DM them, get more info about their properties that I'm talking about from the horse's mouth, from the person who's bought it, from the person who's found it. And also, I post these deals for years, every 2 days in this Facebook group, okay? So this is legit stuff, and I'm here to try to educate and inspire you. The first one, 2 properties in 2 months, $65,000 of growth in 3 months by Hafi Khan. So there you go. I've tagged the person. You can go engage with them if you like. They're all really nice people. So this is in Perth, and I want to make the point that weekly rents are rising $10 per month in Perth. All right. So interest rates are rising, right? That means we shouldn't invest in property, right? Wrong, because with the rent rises occurring in a lot of parts of Australia, that's actually keeping up with interest repayments. So your cash flow position isn't really hurt as bad as you think. This is really high yield as well. So you don't need to compromise between growth and cash flow. Okay. And like I said, the bank valuation just after 3 months of buying this, it went up from $520,000 to $585,000. Now, this wasn't bought like last year before the rate rises. As you can see, I just posted this on the 28th of November. So this is a very recent deal. And yes, $65,000 of growth in 3 months. Now, you might be thinking that's the kind of growth that we were experiencing last year in the property boom. Well, it's still there, just not everywhere. You just need to know where to invest. Really good fundamentals like access to a freeway, good primary schools, or walking distance. And Huffy has bought twice now without a buyer's agent, saving him $30,000 in buyer's agent fees. All right. So is it the right time to buy property? Yep. If you know where and if you know how. Let's go through some details. So the total funds required for this $520,000 purchase was $100,000. The rent is $585 a week. Just because it's got high rent or high yield doesn't mean we need to buy that property. We also want growth, and that's where 30 to 35 data factors come in. Things like job advertisements, building approvals, days on market, stock on market, inventory levels, affordability. All of these things can be quantified right down to the suburb level, and where demand exceeds supply, prices rise. It's not hard if you know what you're doing. Vacancies are really low. There's another point. Huffy bought this in WA from Melbourne, so he didn't catch a flight. He had all the due diligence done for him for free on the ground by a property manager, once again, without needing a buyer's agent. And he's just been doing it himself, self-sufficient, rinsing and repeating and building passive income. All right, so this is the property right here, and I'll go through another 7 of these similar deals. You can see it's really nice, good entertainment area, nicely manicured, landscaped front yard. Nothing really too notable about the property, just another cash cow. Here's another one, 3 properties in 2022. The latest one is the stunning 6.2% yield by Richard. Okay, once again, the person's tagged. If you don't believe this or you're scratching your head whether this is too good to be true, don't believe me, don't listen to me, why don't you just go DM Richard? And you'll also find hundreds of other clients in the Facebook group that you can DM. So this is growing in value just like the last deal every single month. Yield is so high that it's very much paying for itself. 30 minutes from the Perth CBD in a growth area. Look, Richard had 0 confidence before he started understanding the data. Now he's fully confident. That's how he bought 3 properties this year. Okay, and that's why he saved $45,000, $15K a pop in buyer's agent fees. Let's look at the details. $393,000 is the purchase price. He needed about $80,000 to get this deal done. Market rent per week is $470. Actually, he DM'd me after I posted this and he said it was $480, but thereabouts. really, really good data factors as well. This is really this line is the most important thing. It's not vacancy rates, like even though that's very low, it's the underlying data that needs to be solid. Good brick house, big land. We don't really want to buy something small, right? We want to go good land to asset ratio. That's what I'm seeing here. Once again, we're very bullish on Perth at the moment. He's from Sydney, didn't catch any flights, had all the due diligence done, etc., etc. What I love about Richard especially is like he didn't risk giving the keys away to someone else. Like he didn't become dependent on some random property company, for every single property purchase he made. He didn't pay buyer's agents 15K just to send them basically this property of real estate or domain. You could just do it themselves. He didn't get sucked into doing some cheap course from a buyer's agent who would just then on-sell you to their full service because the cheap course wouldn't do its job. Because ultimately no one cares about you as much as you do yourself, your own financial happiness, that is. And look at the property. Once again, there's nothing really to be said about it. It's neither here nor there. It's just all about the numbers. Next one, 2 properties in 2 months. Stunning high growth gem by Alwyn. Once again, you can go check him out. Really good yield, growing every single month. Is really close to a golf course, which is always nice. This says gold course. That's a typo. It should be golf course. Shot Schools Beach. He saved himself $30,000 in buy. In fact, I remember when he had a strategy call with me and he was about to pay this buyer's agent who was one of those, dodgy people who sold off the plan apartments. And I think they were charging him like $20,000 per property. It's just ridiculous. So anyway, he didn't pay a cent of that. And he bought this one for $475,000. As you can see here, needed about $90,000 to get the deal done. Good rent, good data, very, very low vacancy rate, which means the rent rises, and the block size is very good. He's, once again, from Melbourne. He bought in WA. And the thing, I talk about this all the time, right? You're probably thinking, oh, I'm so scared about buying interstate. Once again, I'll reiterate, use a local property manager. If you find a local property manager, they will tell you, is the street good? Is the pocket of the suburb good? Is the property good? What are the cosmetic and what are some even structural issues with the property? Enough so that you can sign the dotted line on the contract with confidence. And then you have the building and pest inspector who will do more of a structural accessibility or assessment of the property, so that with those 2 due diligence hurdles done, you're completely confident to pull the trigger. A buyer's agent is nowhere near as competent as a local property manager, because a property manager deals with hundreds of properties in that single suburb, and a buyer's agent is not qualified to do the job of a building and pest inspector. So if you can have those 2 people on your team, you don't need to spend $15,000 even when buying interstate. All right, and I've got other videos on my YouTube channel on how to use PMs. They're really the bee's knees. Okay, so here's the property here, wonderful brick home. I'm not sure if it was staged or not, but this looks really nice, this kind of open plan living area. And that's one tip I want to give you right here as well. When you're looking for a property, try to find one that has an open plan kitchen. A lot of these old school properties have a kitchen tucked away. No one wants to buy those properties, right? Or very few people do, unless you want to chop down a wall and structurally renovate, which is very difficult. Try to find one with an open plan kitchen. That's an essential thing on your property due diligence. Next one by Tatsuya. Once again, brilliant guy. 6.7% yield, high cash flow, stunner, bought off market. Now I want to delve on this off market piece for a second, right? Just because it's off market doesn't mean it's good. Off market means it's not listed on real estate or domain, but you can get off market deals, even interstate, completely remotely without much time. Just every Monday, Tuesday, call up a few good agents, introduce yourself, tell them what you're interested in. Just do that for a few weeks. It just doesn't take more than 10, 20 minutes every Monday. And then they'll start showing you properties that they have got locked away pre-market or off-market, because they know you're professional, they're interested, you have a pre-approval ready to go. You can compete with buyer's agents and beat them if you're just a nice person and connect with the agent. Don't be shy. The phone call is easy. Just pick it up and say, hey, Bob, Mr. Agent, my criteria is X. I'd love if you could share me some properties. How's the market going? Build a bit of a rapport. It's not that hard. You don't need to pay a $15,000 buyer's agent to build rapport with a single agent. This is exactly what Tatsuya did. He got this off market. Otherwise, he would not be able to get this price on this property. Okay, he was the only one viewing required to secure great tenants. Okay, so it's not like he was lingering around for weeks trying to find a tenant. One inspection, got the tenant, bang. It's growing every week in value, every month in value. He's bought twice now without a buyer's agent interstate, saved himself $30,000. Check this out. $335 is the purchase price, needed less than $65,000 to get the deal done, $430 rent, hence the yield is very good, great data, very good vacancy rate. Brick, once again, he's bought from Sydney to WA. So you can see the trend. A lot of Sydney, Melbourne people aren't buying in Sydney and Melbourne anymore because I'm very bearish on the Sydney market, the Melbourne property market. You look interstate, you buy higher yield, cheaper properties, you can buy more of them. It improves your borrowing capacity. I mean, that's just property 101. Didn't catch a single flight, and he's just doing this again. Like, he didn't even ask any questions from me this time. Just completely self-sufficient, self-reliant. And here's the property. Once again, I don't know what to say about the property. I don't know why people scroll realestate.com looking at properties and trying to figure out if they're good or not. The actual picture has nothing to do with whether it's a good property or not. It's the data that I just shared. Let's go with more tips now. 3 properties in 12 months, rinsing and repeating with John Darby. Now, John lives in Hobart, and he's got a diversified portfolio now. He's got one in Adelaide that he bought at the start of last year. He's got one in Queensland. This one is his diversification into WA, 5.6% yield. You know, it's actually growing despite interest rates. Once again, people don't believe me. Once again, just DM John, see what's up. Walking distance to school, shops, transport. He saved $45,000. Check this out. I mean, that's another deposit right there. If he had used buyer's agents, then he would not be able to get this third property because he wouldn't have the funds, okay? So he's been able to do that because he's done it himself. And yes, it takes a little bit of patience, but anything good in life takes a little bit of time. We're not talking a part-time job, 3 to 5 hours a week for a couple of months gets you a property. $402,000, $75,000 to get in. $430 rent per week, good data. This is very low vacancy rates. That tells me that rents will rise very, very swiftly in this area, meaning that even with any future rate rises, you're offsetting that with additional cash flow, good block size, and it's a 1995 build, so good depreciation. This is something that people don't realize. You know, it's not that we should buy property for depreciation because the depreciation happens on the building. You don't want to pay predominantly for the building because the buildings depreciate, the land appreciates. We want to pay predominantly for the land. But if you can get something built after 87, that is good because then you can get a bonus, which is the tax depreciation. So he's getting, that probably tips it into positive cash flow. Territories bought from Hobart and WA completely remotely. And here's the property. I like how the sun is setting on this picture. Once again, there's nothing really to be said about it. You know, the beautification or how beautiful the property looks is not what gets us out of the 9 to 5. It's the numbers, but this one is pretty beautiful. Next one, $70,000 in 2 months with bank valuation, another Queensland money maker. So you might say, hey, interest rates are rising. How come this property is going up in value, PK? It doesn't make any sense. Well, just DM Tanvir and he'll let you know, okay? It's all about the data, guys. Like, there's 15,000 suburbs. Some are falling, some are going sideways, and some are still rising, believe it or not. If you're brand new to property, you're probably like, that's just not true because the media is saying it's not true. Well, education. If you convert the laundry in this house to another bathroom, which costs about $15K, that will make you another $50K of equity. So we want to buy properties that give us good cash flow, good growth, and we want to buy them with some value add potential. That's ideal, okay? And that way we can additionally get extra equity to harvest and fund another deposit for another property portfolio. Okay, this is walking distance from a university, which means you just can't go wrong long term. Okay, $435,600 is the purchase price. Needed $80,000 to buy it. Rent per week $460. Good data. Low vacancy rate. Brick. Almost 700 square meters. Bought in Queensland, so you can see we're not just doing in Perth. In fact, we're buying in South Australia, WA, Queensland, parts of New South Wales, and very smidgen, small parts of Victoria as well. Nothing really in Northern Territory or Tassie or really ACT these days anymore. Once again, just based on the data, I'm sure we'll start buying there again in the future, but right now the data is leading us to specific areas. And here's the property. There you go, not much to be said. Cash flowing, 7.2% yield, Perla in Queensland's magic suburb, under $300,000. Now, this is really a magic suburb. This is bought now 3 times Alfred is bought. You can see Alfred is tagged. I've actually done a YouTube interview with him as well, so go check that interview out and hear from the horse's mouth. He's bought 3 times without needing a buyer's agent, so that's $45,000 saved, but he's diversified now across 3 states. I think it's Queensland, WA, and New South Wales, if I'm not mistaken. You know, massive capital growth. It's literally going up by tens of thousands, which is great to see. 290,000 purchase price. So yeah, you can still buy properties under $300,000. Needed less than $50,000 to get into this property. So, you know, if you don't have $100,000, don't worry, you can still buy property. I got this question the other day. Hey, PK, I've got $150,000. Can I afford a property? Yeah, you can probably afford 2 or 3 of them. Okay. Negotiated $30,000 over 3 weeks. So, you know, it's not such a hot market as it was last year. So if you know negotiation, you can learn through the accelerator program, then you can be like a hardball. You can be a jerk, so to speak, you know, politely with agents and really go back and forth and get the price down. You don't need to rush in all the time. Depends on the suburb, right? Here he got $30,000 off over 3 weeks, which on a 300K property, like that's 10%. Like that's, you know, that's a huge deal, right? 400 a week in rent, which is massive yield, you know, well over 7%, I think. Great data, good look vacancy rate, huge block of land bought in Queensland from Melbourne, didn't catch a single flight. I really want to emphasize as well, like there's so much information online, including my YouTube channel. And if you just take bits and bobs from everyone, like you're going to make a mistake. You know, you really need to understand the data, because I might lie, another person might lie, but the data is just cold, hard facts. It doesn't care about you, doesn't care about me, it just cares about what's true. And if we can rely on the numbers, then we will get the results. Okay, here's the property. You might say, hi, that doesn't look very pretty to me. I don't care, right? Like this is what is needed. Maybe 5 or 6 of these, you exit your 9 to 5, and you retire. That's what we're interested in. Last one, beautiful for a change, maybe 6% yield, walking distance to the beach. Okay, like I said before, Perth rents are rising $10 every month. Okay, $10 every month in their weekly rent. It's growing despite interest rate rises. I've talked about Queensland suburbs, Perth suburbs, other suburbs. There are suburbs in more than 3 states right now that are rising so fast, even despite interest rates. It's a beautiful cul-de-sac in the best part of the suburb. So we don't want to buy the worst property on the best street. We want to buy the typical property in the best part of the suburb. The suburb does the heavy lifting. We want to buy the average property. I don't know where this aphorism came where it says buy the worst property on the best street. No. Buy the typical property, because the typical or average property is the one with the most demand. On a normal distribution curve, most people want the average type of property. That is what we want in the best part of the suburb. Side access for a caravan, boat and trailer is really important in this suburb. You know, it's just like an extra, and tenants will pay potentially, you know, $20, $30, $40 extra per week for that privilege. He's bought twice now. Nick has down here saved himself $30,000 in buyer's agent fees, $480 purchase price, needed $90,000 to get the deal done. Rent is $550, which is really remarkable for a quote unquote expensive property, right? Like there's no point buying investment properties above $750. That's really my threshold when I look at the data and how rents rise the most, how capital growth occurs the most on properties that also have high yield, and under $750 is really the sweet spot for yield now, yield in the future, and growth. But this is, you know, most of our properties are bought under 500. This is really touching 500. Is such a good yield for that kind of price point. Really good vacancy rate, big block of land, tax benefits, like I said before. With tax benefits, you can either go for a diminishing value schedule or a straight line schedule. Diminishing value gives you most tax benefits today, and that diminishes over time. Straight line accounting method gives you the same but less over a longer period of time. I always go for diminishing. That's just my tip for anyone who has got a depreciation schedule or a property with depreciation benefits. Diminishing rocks, go check that out. Talk to an accountant if you don't already have one. Brick, it's bought in WA from Sydney, didn't catch a single flight. And look, you know, if you really do want these results in 2022, it's coming to an end now. Maybe the start of 2023. You have to start now. Like this is, you know, it takes about 3 to 5 hours a week over 1 or 2 months. You can get fantastic deals. You can actually learn how to do it. It takes less time than you actually think. I'll continue to post member results 4 times a week on my Facebook group. You can go back and look at the hundreds before and check out the next one. But I thought I'd end it on this one because actually it's quite a nice, pretty looking property. This just lasts the test of time. You know, it's classic in its build, in its aesthetics. It's just one that you never want to sell. So hopefully that brought you some education education, guys, brought you some inspiration about what makes good investment properties right now at the end of 2022. Is this the right time to buy investment properties? Yes, it is, but only if you know where to buy and you know how to buy these two ingredients. If you don't know these two things, then don't just blindly trust someone else. Don't just blindly put a blindfold on and just throw a dart at the board. You will lose money. This is not the middle of a property boom holistically anymore. Only select suburbs in each city or each state are actually booming. So you need to be much more clinical and prescriptive about where to buy. Hopefully that was awesome. If it was, hit the subscribe button, give it a thumbs up, give it a like, and join my Facebook group that I shared before. I'll leave links below in the comments to that Facebook group as well. And, engage with, these members, my clients, engage with the community. If you're skeptical about me, or if you're skeptical about property investing in general, overcome that skepticism, perhaps for yourself or your partner, by being amongst it. Immerse yourself a little bit in property, and those around you in this Facebook group will start to illuminate you, and you'll start to see that actually, that was a bit foolish. Am I thinking of a property crash? Am I thinking that property doesn't work? Or am I thinking that I only need to buy in Sydney, or I only need to buy negative geared properties, or I don't have enough money to buy property? All of these limiting beliefs were just that, limiting beliefs. The reality is something else. Thank you so much, guys. My name's PK. I'll see you next time. Catch you later. Bye.